So while formal consensus actuals for EPS and revenue weren't really disclosed for a direct comparison, Grupo Financiero Galicia just dropped their Q2 2026 earnings,
Oh,
and the top-line number is just massive. Net income hit 258 billion Argentine pesos,
right.
which is like a solid 12% year-over-year increase.
Yeah, it's wild.
Right. I mean, imagine dealing with Argentina's historic macro headwinds and still boosting your profits by 12%.
Oh, yeah.
You'd expect investors to throw a parade, but management immediately slashed their full-year loan growth guidance down to just 10 to 15%.
Yeah, they're targeting a 10% ROE.
Exactly. So the stock reaction was just sort of muted. It dipped 0.77% to $43.86. Okay, let's unpack this, because if you're watching Emerging Markets, we're doing a deep dive into GGAL's Q2 earnings report
Yeah.
to understand why exactly the market shrugged off a 12% profit increase.
Yeah, so to understand that kind of lukewarm reaction, we really have to look at the divergence in segment performance. Like, where is that cash actually coming from, and where is it bleeding out? Because the core driver this quarter was Banco Galicia. It contributed 61% of total income, so that's about 158 billion pesos.
Oh, why?
And that's a 211% jump sequentially.
Wait, a 211% sequential jump.
Yeah.
I mean, how does a traditional bank just triple its core income in 90 days without taking on insane risk?
Oh, it's mostly driven by lower funding costs and better bond yields. So when the central bank aggressively cut rates, Galicia's cost to borrow money, their funding costs just plummeted.
Oh, I see.
But they were still holding these government bonds paying out at older, much higher rates.
Okay, so they basically captured a temporary massive profit margin in that gap.
Exactly. Combine that with a really improved 38.8% efficiency ratio.
Right.
So they're spending way less to make that revenue. And thanks to all that, group margins are guided at a very healthy 17% for the year.
Okay, but looking at the holding group as a whole, it honestly feels like a barbell investment strategy to me.
Also.
Well, you've got Banco Galicia functioning as this steady blue chip anchor, bringing in the cash.
Yeah.
But then you look at Naranja X, which is their digital consumer unit.
Oh, right. Naranja X.
Yeah, it's this high-risk wild card. I mean, they're sporting a near 20% NPL ratio
Yeah.
and an 18.3% cost of risk. That is just a brutal level of consumer defaults to be carrying.
It is heavy. It's really heavy. But what's fascinating here is how quickly the HSBC integration synergies are actually offsetting those consumer credit losses.
Wait, how so?
So management is using the HSBC Argentina acquisition to basically buffer that bleeding. They're realizing massive corporate cost savings. I mean, they're operating with the exact same headcount they had before the acquisition.
Oh, wow. So they're taking the corporate synergies from the banking side and using them to pay for the digital unit's losses.
Precisely.
Now, that internal tension, though, squeezing maximum efficiency out of the banking side just to survive stressed consumer credit, that perfectly mirrors management's cautious macro outlook, doesn't
Oh,
it?
absolutely. It's totally connected.
Because they're actively limiting local peso lending right now.
Yes.
Instead, they're pivoting hard into U.S. dollar-denominated loans,
Yeah.
particularly targeting the oil and gas sector.
Yeah, which is a highly defensive posture. And this brings us to the notable risks right now. Argentina's disinflation, it dropped to 1.9% monthly in June.
Which sounds like a good thing, right? I mean, cooling inflation is generally the goal. Why is that a risk?
It's a double-edged sword. As inflation cools, yes, it reduces the bank's monetary losses,
Right.
which is great for the balance sheet. But remember those rate cuts we talked about?
Oh, yeah, the central bank cuts.
Right. So as inflation drops, rates drop.
Hmm.
And that severely compresses their interest rate spreads.
Oh, okay.
The spread between, what they pay for deposits and what they charge for loans gets squeezed super tight.
Making it just incredibly hard to generate income in local currency.
Exactly. So if we connect this to the bigger picture, Argentine macro volatility remains the ultimate ceiling on GGAL's valuation multiples because they can do the HSBC integration perfectly, they can trim the fat, but if local peso lending is constrained by those spreads, investors just won't price in future growth.
Which is exactly why they slashed loan growth guidance to 10 to 15%.
Yep.
And why the stock just yawned at a 12% profit increase.
That's the whole story.
So what does this all mean? We're basically looking at a bank optimizing internal efficiency and focusing on corporate dollar lending while sort of waiting out a brutal domestic consumer cycle.
Yeah, that's exactly what they're doing.
But it does leave us with this final provocative thought for the listener to ponder.
Okay.
If Argentina's leading private bank is actively retreating from local peso lending to focus on corporate USD loans, Who exactly is going to finance the everyday Argentine consumer's economic recovery?
That is a very good question.
Definitely something to chew on. Thanks for joining us for this deep dive, and make sure to follow the show for your daily earnings coverage.